Well, welcome. Good morning. Thank you for joining us. We hope you're staying sane during this third lockdown. This morning, we're going to be talking about the upcoming changes to IR35. Before I introduce you to our speakers, just a little bit of housekeeping. This webinar is being recorded. So we'll be sending out a copy of both the recording and the slides after the webinar is finished. The webinar is scheduled to be 1 hour long. Some of you have already sent questions in. If you do have any questions, please put them in the chat. We will get to as many questions as possible and we'll do our best to help you through any issues that you have. Now, that being said, I'd like to introduce you to our speakers for today. We have Sarah Scholfield, an associate solicitor that's part of the employment team at Glaisyers Solicitors. I'm Jill Springbett, who's a partner at MGR Weston Kay. They will be talking through what IR35 is currently and how things are going to change in April. So I will leave you in their capable hands, and Sarah, I'll let you start.
Thanks for that, Bethany. Yes, so my name's Sarah. I'm an employment associate solicitor at Glaisyers, and this morning I'm going to be talking to you about IR35 and the current arrangements for IR35 in the private sector. And I'll then hand over to Jill Springbett, who will be talking to you about the upcoming changes to the off-payroll working rules from next month. So let's get started. Okay, so before we look in detail at the IR35 regime itself, I just wanted to spend a little bit of time thinking about status, employment status, and how the Employment Tribunal and the tax tribunals classify individual workers. And you'll see from my first slide that there's an obvious difference straight away from status from an employment law perspective versus a tax perspective. So from an employment law perspective to begin with, you'll see that there are 3 different potential statuses that can attach to an individual worker or contractor. And I like to think of these as sitting along a bit of a spectrum. So at one end of the spectrum, we have employees, and they're defined for employment law purposes as an individual who enters into or works under a contract of employment. And a contract of employment is defined as a contract of service and also a contract of apprenticeship. Employees, as the name suggests, benefit from the whole plethora of employment law rights that exist. Some of those are what we call day one rights, so you'll have them from the moment you commence employment, and others you will qualify for after a certain minimum amount of service. So obvious examples would be things like the right to national minimum wage, the right to paid statutory holidays, the right not to be unfairly dismissed after 2 years service, the right to a statutory redundancy payment after 2 years service, and the list goes on as regards employment rights for employees. At the very other end of the spectrum, we have self-employed individuals or independent contractors, and as the name suggests, they benefit from no employment law rights because they're not employees. What we now also have is this kind of hybrid status of a worker. And a worker essentially applies to individuals who are not full-blown employees, but equally well, it wouldn't be fair to class them as being entirely independent contractors because there's a degree of dependency there. And it lowers the pass mark really for individuals to give them some basic employment law rights. And the test for a worker consists of 2 limbs, which is just essentially 2 elements to the test. So the first element is an individual who enters into or works under a contract of employment, which would clearly cover employees and apprentices. And then the second limb of the test, what we call the limb B test, are individuals who enter into or work under any other contract where they're committing or undertaking to personally provide services or work to the other contracting party. And importantly, the other contracting party is not a client or customer of that individual's business or undertaking. And it tends to be the limb B test where you see most litigation in the employment tribunal. And very, very recently, last month, in fact, we had the Supreme Court's decision in the Uber case, which all centred around this LIMB worker test and the Uber drivers. And I will touch upon that in a little more detail shortly. So they're the three categories of potential status from an employment law perspective. And if we switch to think about the tax regime, then you'll see that there are only two statuses that can apply to an individual worker or contractor from a tax point of view. And therefore you can either be an employee or you're self-employed. If you're an employee, then the relevant employer in that situation is responsible for accounting for appropriate PAYE tax and national insurance contributions. And obviously, if you're a self-employed individual, you're free to structure your income in the most tax efficient way. Commonly, that may be by way of a small salary and dividend payment, for example. It's important to note that if somebody is regarded as an employee for tax purposes, that does not automatically mean that they would be an employee for employment law purposes, and vice versa. I think the reality is, though, in most cases, it would probably be the case that if you were classed as an employee for one purpose, you would likely be regarded as the same for the other, but don't automatically make the assumption that that will always be the case. Okay, so introduction to IR35. What is IR35? You may have heard it referred to as the intermediaries legislation. So what is it then? Well, it's essentially an anti-tax avoidance legislation. It's set out in Chapter 8, Part 2 of the Income Tax, Earnings and Pensions Act 2003, and it regulates the tax treatment for workers who provide services through an intermediary. And an intermediary, wrong slide, and an intermediary is commonly a personal service company. So you'll see from this slide here, I've just set out a very, very simple example of an intermediary structure where we have a contractor providing services through an intermediary to an end user client. Now, to establish employment status from both an employment tribunal and a tax tribunal perspective, there needs to be a direct contractual relationship between the individual contractor and the end user client. And the client is just the person who's actually receiving that individual services or work. And in the absence of that direct contractual relationship, there will be no contracts of employment. And so what individuals can do is put in place a corporate structure like this with an intermediary, a personal service company, to prevent that direct contractual relationship from arising. And HMRC has long been concerned about individuals deliberately choosing to structure and provide services in this way to avoid having to pay the increased rates of employment tax, even though the reality may be that the contractor is really in employment with that end user client, but for the existence of the intermediary. And according to the revenue, only 10% of personal service companies correctly apply the IR35 rules, which in revenue's view is costing them upwards of £1 million a year in lost revenue, which goes some way, I think, to explain why they're now looking to make further changes to this regime next month, which is what Jill will be talking about in a little bit more detail shortly. Okay, so does IR35 apply? Firstly, I thought it might be useful to just explain a little bit of the terminology. You may hear people referring to IR35 as you fall inside IR35 or you fall outside of IR35, and what on earth does that mean? Essentially, if you fall inside IR35, it means that the IR35 regime will apply and you have to comply with the three-step tests which I've outlined on the slide. If you fall outside IR35, then the regime doesn't apply and you're genuinely a self-employed contractor and you don't need to worry about the IR35 regime. And IR35 essentially says, well, in the absence of a direct contractual relationship between the contractor and the end user client, in this example here, you construct or you construe a hypothetical contract. So in other words, what would the terms be if the contractor were directly employed by the client? And it essentially involves ignoring the intermediary, ignoring the personal service company, and thinking about what contractual arrangements actually exist between the contractor and the end user client. And there's 3 steps to applying IR35. You'll see the first step is looking at the written contract. So what does the contract between the personal service company and the end user client actually say? What terms are in place between the parties? There will often also be a contract in place between the individual contractor and the personal service company, and it's also useful to have a look at that contract as well. But you've got to go one further than that, and you've got to look at the circumstances and the working arrangements that apply between the parties. And ideally, you want your contractual documentation to mirror the working arrangements. So what's happening down on the ground? What's the reality of the situation? Once you've done that, you then move on to step 2, which involves construing or constructing this hypothetical contract. So what would the terms be between the contractor and the end user client, but for the intermediary? And once you've construed those hypothetical terms of that contract, you then undertake the final step in the IR35 test, and that's applying the employment status test to that hypothetical contract to determine whether that would be a deemed contract of employment, and if it would be, then that arrangement would fall within IR35. So in terms of the employment status tests, I just want to spend a little bit of time now talking you through some of the most important employment status tests, and these have been derived from decisions of the Employment Tribunal and the Tax Tribunal, and they do apply the same tests essentially to determine status in both arenas. And what the case law allows us to do as advisors is to distill the most important tests and factors and conditions to think about when trying to make an assessment on whether an individual worker is likely to be an employee or not. So the first test you'll see from my slide is what we call the personal service test. And that involves a consideration of whether there's an obligation on the individual contractor to personally provide their services or work. If there is, that is an indication that they may be in employment with the client. Often something that goes hand in hand with personal service is a right of substitution. So the contract may provide for the contractor to provide a substitute. If that's a genuine unfettered right of substitution, i.e. the contractor can send whoever they like, whenever they like, then that would indicate more of a self-employed arrangement. It's important with substitution clauses. Yes, it's useful to have one in the contract, but the better evidence, the strongest evidence you can have to try and demonstrate self-employment, is that the substitution clause has actually been exercised in practice. Revenue are pretty switched on to substitution clauses being included in contractual documents to deflect attention away from the fact this may be actually genuinely an employment relationship, and they would disregard that as a sham, essentially. The second important test is what we call the mutuality of obligations test, and that essentially involves a consideration as to whether there's an obligation on the client to provide work and an obligation on the contractor to undertake that work for an agreed sum. And again, if there is this mutuality of obligation, then that would tend to indicate that it is potentially an employment relationship rather than a self-employed relationship. The control test is the third test that we will think about. So does the client, the end user, control what that contractor is doing? Do they control when the contractor is providing their services? Do they control where the contractor is providing those services from? And do they control how the contractor is delivering those services? And obviously, the greater the degree of control exerted by the client over the contractor, the more likely they are to be regarded as an employee. In terms of control, the case law makes it clear that it isn't necessarily day-to-day control that must be exerted, but there must be at least a framework of control in place. And when it comes to control over how services and work is provided, the courts are increasingly recognising the fact that in some instances, that's perhaps not the most important element of the control test, because there may be very genuine reasons why the contractor or the client in the particular scenario may be exerting a certain degree of control over how the service or work is provided. Another test that I just mentioned now in passing is what we call the integration test, and that involves considering whether the contractor is part and parcel of the client's business. Sometimes that can happen over time, that an individual just becomes part of the furniture, if you like, and are treated in the same way as the client's employees. Again, the more integrated somebody is within a business, the more likely they are to be regarded as an employee. And then finally, we have the other test, the other provisions of the contract. So you have to look at the rest of the contract and determine, are those other terms consistent with this being a contract of service? And it's important that with employment status tests, you remember that it is not a tick box exercise. So if you tick personal service and control and mutuality of obligations, that does not necessarily mean that there would still be an employment arrangement there. You've got to take a bit of a step back and have a look at the bigger picture and determine whether all the other terms of that contract do genuinely attune and align with it being a contract of employment. So that's thinking about things like, is the individual contractor in business on their own account? How is the personal service company being run? Is it being run genuinely as a business? Does it have its own website? Does it have its own offices? Do they employ other employees? Do they have their own insurance policies in place? All of those things would tend to suggest it is more of a self-employed arrangement rather than an employment relationship. Could the contractor earn a profit from the way they decide to deliver those services or work? Again, if they can, that would indicate more of a self-employed arrangement. Similarly, could they suffer a loss? If there's some problem with the work, are they obliged to go back and remedy that in their own time and at their own cost? Again, if they are, that would indicate more of a self-employed arrangement than an employed arrangement. So I now just wanted to talk through a couple of cases, decisions that we've had actually in February this year. One is a decision from the Upper Tier Tax Tribunal and the other is a decision from the Supreme Court. So in terms of the tax case, you'll see from my slide that's the case of HMRC and Atoll House Productions Limited. And we had the decision from the Upper Tier Tax Tribunal in February this year. And this is a case concerning a BBC radio presenter called Kay Adams. And Miss Adams provided her services to the BBC through her personal service company, Atoll House. And she entered into a contract, the terms of which required her to present at least 160 programmes during the course of a year. And in return for that, the BBC contracted to pay her a fee of £155,000. The BBC had some modified right of first call over her services and some control over her ability to undertake other assignments for other companies. HMRC investigated the arrangement and they determined that it fell within IR35 and that actually Miss Adams was in deemed employment with the BBC, and therefore the fee her personal service company received from the BBC was actually employment income and had to be taxed accordingly for PAYE and national insurance deductions. Miss Adams appealed to the First Tier Tax Tribunal and was successful, and they agreed with Miss Adams that it was an arrangement of self-employment, and HMRC decided that they would appeal that to the Upper Tier Tax Tribunal, and the Upper Tier Tax Tribunal rejected HMRC's appeal, and in their judgment, they considered a number of the employment status tests that I mentioned a short while ago. And I think it just highlights the fact that, as I said a little while ago, it isn't a tick box exercise. You've still got to take a bit of a step back and paint the bigger picture to determine whether an arrangement is likely to be self-employed or employed. And here, the Upper Tier Tax Tribunal said, well, we're satisfied that there is mutuality of obligations to indicate an employed relationship because the BBC is committing to pay Miss Adams a minimum fee in return for her contracting to undertake a minimum number of the radio programmes during the course of a year, and those programmes were to be delivered at times and places dictated by the BBC. The Upper Tier Tax Tribunal was satisfied that the control test was satisfied from an employment perspective as well, because the BBC could restrict Miss Adams' ability to undertake other work, and then also had, as I mentioned before, a modified right of first call, in other words, first refusal over her services. And then the Upper Tier Tax Tribunal moved on to consider this other factor of, well, what do the other provisions of the contract provide for, and are they consistent with it being an employment relationship, or are they consistent with it being a self-employed relationship? And it was that part of the status test that shifted Miss Adams and Atoll House Productions contract into the self-employment category from the employment category. And the Upper Tier Tax Tribunal were quite focused really on the fact that Miss Adams had entered into the contract through a personal service company, genuinely in business on her own account. They looked back at her 20+ year history as a freelancer, and they said, well, we accept that for the relevant tax years that were in dispute, there was a degree of financial dependence between her and the BBC, but that actually when you looked back at her history, her career, she genuinely was a freelancer, and that was what was happening here. And they also looked at the fact that she didn't have access to the BBC systems at home, and she wasn't subject to any of their internal policies or procedures. So for example, she didn't have an annual appraisal with the BBC. So as I say, I think that's a useful case just to remind you that yes, the tests are important and work your way through them, but also don't forget to look at things in the round and take a global view on things as well. I just now want to briefly mention the Uber case, which I touched upon when I was speaking about worker status a short while ago. The Uber case actually has been rumbling through the courts for nearly 5 years now. It all started back in 2016 when 2 of Uber's drivers issued proceedings in the Employment Tribunal against Uber, and they were arguing that they were workers under the Lim B worker test, and therefore they should get the national minimum wage and paid statutory holidays. Uber have consistently rejected this and maintained that they're independent contractors, and Uber's stance has always been that they've been simply providing a technology platform to connect these independent contractors with customers. And the Supreme Court followed the decisions of the employment tribunals that have gone before and said, nonsense, these drivers are clearly workers of Uber's. They looked beyond the contractual documentation because Uber had gone to great pains and great cost to have contracts put in place that made repeated reference to the fact the drivers were self-employed. And the Supreme Court said, well, we're not bound to just look at the contract alone. We must go behind that to see what's happening down on the ground. And having done that, they were very clear and unequivocal that these people were workers. And they looked in particular at the fact that Uber dictated the fare they could charge, which obviously affected their pay. They looked at the fact Uber imposed their contracts on the drivers. There was no negotiation possible. Uber constrained the driver's ability to reject rides, fares. They restricted communications between the drivers and the customers. And all of those factors came together to paint a very clear picture of Uber exerting significant control over their drivers. And interestingly, I have the Uber app on my phone, and last Wednesday they sent me an email to say that they were now going to start paying their drivers the national living wage, paid statutory holidays, and were auto-enrolling them into a pension scheme. There was no mention of the fact that they were doing this because they'd been told to by the highest court in the land, but rather they were sort of painting this out as being them taking great care of their valued drivers. So I just now want to touch upon the CEST tool briefly. That's the Check of Employment Status for Tax tool that HMRC have on their website. For those who aren't familiar, it's a tool individuals and businesses can access, and it takes you through a series of questions, and at the end of that it will give you a view on whether the arrangement is likely to fall within IR35 or outside IR35. And HMRC do say that if you answer the questions accurately, they will stand by any determination of the CEST tool. It has been riddled with complaints since it launched back in 2017, and it doesn't always give a determination. According to CEST's own statistics, in the 12 months up to November 2020, in 19% of the 975,000 CEST applications that were made, it didn't deliver an outcome for 19% of those. Nonetheless, it's still a useful tool. One, because it gives you an insight into the way the revenue may well view things if they do undertake a review into an arrangement. And secondly, if you keep a copy of the decision and the questions and your answers, it will act as really useful evidence if you ever face an investigation from the revenue. So how does IR35 currently work then in the private sector? Well, responsibility for determining whether IR35 applies at the moment sits with the intermediary. So it sits with the personal service company itself. They have to go through the three-stage test that I mentioned a short while ago. And having gone through that test, so having looked at the written terms, having looked at the circumstances, having construed the hypothetical contract, and then having applied the employment status test to that contract, if the personal service company, if the intermediary determines that they think IR35 does apply, i.e. that the contractor is in deemed employment with the client, then they have to operate PAYE and deduct appropriate national insurance contributions. If an intermediary does not do that and HMRC subsequently determines that they ought to have done because the arrangement falls within IR35, then the revenue can pursue the intermediary for the unpaid tax plus penalties and costs. They have ordinarily 4 years within which to pursue recovery of income tax and national insurance contributions, but that can be increased to 6 years where there's some suggestion of perhaps deliberate omission, and up to 20 years if there's any suggestion of fraud. So that, as I say, is my section of the talk. So what I'm going to do now is I'm going to hand over to Jill, who's going to take you through the changes to IR35 and the off-payroll working rules, which will come into effect from next month.
Thank you for that, Sarah. So Sarah has been talking about the existing IR35 rules, which in some cases continue to apply. And I'm now going to be talking about the new off-payroll working rules. These apply from the 6th of April 2021 if the ultimate engager or client, as I'll refer to them in this talk, is inverted commas medium or inverted commas large. Where the off-payroll rules apply, it's the client that has to deduct the tax at source, whereas, as Sarah mentioned with IR35, it's the intermediary that has this obligation. So we've got two rules that are very similar, working hand in hand, but with completely different obligations. So why have they brought in the off-payroll working rules? As Sarah briefly mentioned, the HMRC in 2019 said that 90% of the intermediary companies who should have applied IR35 failed to do so. And HMRC, or rather Treasury I think it was, estimated that the annual loss of tax revenue from this lack of compliance was £1.3 billion and would be by 2024. Every year, £1.3 billion. Now, I have to say, this is rather surprising to me because HMRC haven't really been policing the IR35 rules, except in certain particular cases, and especially around people who work for the BBC, because the BBC forced a lot of their presenters to form personal service companies, and then HMRC have just been going in and seeing if IR35 applied. Obviously, in the case of Atoll House that Sarah was talking about, Kay Adams won the case in the upper tier tribunal, and there have been lots of other cases actually where HMRC have lost. They've won in a couple of cases which really should never have gone to court, but anecdotally I think they've been causing a lot of difficulties for people who are more or less clearly self-employed, and therefore quite a lot of people I believe have been giving way to HMRC. They maybe would have been able to fight on a bit further, but anecdotally, they just don't have the appetite and they don't have such a good case as, say, Kay Adams had. So rather than increase HMRC's resources to police lots of small companies, obviously some of the people like Kay Adams, she earned a lot of money, there was quite a lot of tax at stake. A lot of the people who operate through personal service companies are IT contractors. They are professionals, they earn a fair bit of money, but it's not the sort of figures that we're talking about with Kay Adams. So HMRC would have had to have looked in detail at a lot of companies, and despite them saying that there would be £1.3 billion at stake, they haven't actually been doing this to any great extent. So what they've now done is put the onus onto larger companies. And where you've got a medium or large company, they now have to do the tests and check the position. And if they get it wrong, then they've got the obligation to pay the tax, and they will have the tax and the penalties if they get it wrong. So as a result of all of this, we do now have some complicated rules for particularly determining whether you're large or small or whatever, and what happens also when you change from, say, being small to being a medium-sized company. So Sarah has already covered this, but I thought it would be helpful just to give a reminder of a typical operating structure with an intermediary. Here we've got Oscar, who's the worker. He provides services via Oscar Services Limited to Juno Limited. So Oscar is the worker. Oscar Services Limited is his intermediary company, otherwise known as a personal services company. And then Juno Limited is the client. And whether you're looking at IR35 or the off-payroll working rules, you consider the relationship ignoring Oscar Services Limited. Between Oscar, the worker, and Juno, the client, is there, ignoring Oscar Services Limited, an employment relationship. But the difference, when you come to looking at the off-payroll rules, is that if the IR35 rules apply, it's Oscar Services Limited that has the obligation to pay the tax, deduct the tax properly, and account for it. And if it gets it wrong, it's Oscar Services that has the penalties and so forth. Whereas if the off-payroll working rules apply, because Juno Limited is a large or medium company, it's Juno that has the tax obligation. So you can see there's quite a shift. I would also mention that if individuals provide services as a sole trader, whether it be to a small, medium or large business, the business still has to consider if it is a genuine self-employment. If the relationship is actually employment, you've got to account for pay-as-you-earn tax and national insurance in the same way as you do for any other employee. It's important to remember that the IR35 and off-payroll working rules only apply where individuals provide services through an intermediary or personal services company. So the starting date, public sector clients have actually been subject to off-payroll working rules since April 2017. And that has actually included the BBC and Channel 4, as well as what you would normally expect, government departments and so on. And again, anecdotally, because they brought in these rules, they suddenly lost a lot of IT consultants, because they started withholding tax from IT consultants who then promptly got work in the private sector because they didn't have tax withheld from payments made to them. But now it's applying to the private sector too. And the rules apply to payments for services provided after 5th of April 2021. Where services were provided before the 6th of April 21, they're not covered by these rules. The obligation to account under the off-payroll working rules is also for an income tax year, which is the year to the 5th of April. So the first year is the year to the 5th of April 2022, and so on. So even if the company's account year is, say, the 31st of December, they've got to apply these rules according to our bizarre UK income tax year. HMRC have said that they will apply a light touch to penalties in the first year, so up to the 5th of April 2022. But this is on the basis that the medium or large business has tried to comply with the rules. So you will need to have evidence, if you're a medium or large company, that you have tried to comply with the rules, even if you don't get it right. So, as I mentioned, the off-payroll working rules only apply to medium and large businesses, generally a company, but it can be other businesses. If you are a small client, you are exempt from the off-payroll working rules. And then, as you know, the IR35 rules apply to your intermediary. So what constitutes a small company is obviously very important. A company is small when it meets 2 of 3 conditions, which are, I believe, the same conditions as determined for most companies, whether there is an audit. The annual turnover is £10.2 million or less, a gross balance sheet total of £5.1 million or less, or an average number of employees of 50 or less. As I mentioned, the rules apply for an income tax year, so for the year to the 5th of April, while the company's accounts can be drawn up to any date. So you therefore apply the tests for what is small using the information in accounts, the filing date for which is in the year before the start of the income tax year. And you also have a grace year when you stop being small. This means that you have to have been not small for 2 accounting periods before you have to start applying the off-payroll working rules. I think this is probably best explained using a quick example. So we've got 2 companies here, Athena Limited and Bertram Limited. Athena's accounts are prepared up to the 30th of June, and those for Bertram to the 31st of July. In both cases, in their accounts that ended in 2020, they stopped being small. They failed to have at least 2 of those tests on my previous slide. So the filing deadline for Athena's accounts is the 31st of March 2021, and the filing deadline for Bertram Limited, because it's got a month later accounts, is the 30th of April 2021. Athena has to start applying the off-payroll working rules from the 6th of April 2022, as long as it's also not small in its accounts to the 30th of June 2021. Whereas Bertram has an extra year because its filing deadline there was not in the year to the 5th of April 2021. It was in the year to the 5th of April 2022. So it has to start applying the off-payroll working rules from the 6th of April 2023. So this is not simple, and the guidance from the revenue is not actually very clear about this. So I suspect there will be a fair number of people who get confused about this. If a client is part of a group of companies, it can't use a small company exemption unless the consolidated group that it's a member of also qualifies as small. And there are some slightly different tests in relation to groups, as from singleton companies. It's slightly more complicated. As I mentioned, it isn't just companies that can be clients. It can be sole traders, partnerships, and overseas companies. The tests are different. The basic test is a turnover test only, which is annual turnover of £10.2 million or less. And again, there are rules about which accounts you use and so on. Where the status of the client changes to small in its accounts for 2 consecutive years, so if it stops being small in just 1 year, it still has to keep on applying the rules, the off-payroll working rules. It has to be small in its accounts for 2 consecutive years. It has to notify the actual worker contractor and intermediary company before the tax year about the change. And there is a deemed employment status assessment, which I'll cover in a minute. That is withdrawn, and then the intermediary is back into IR35 and then has to account for the tax itself. So if the off-payroll working rules apply, the client, that's the user of the personal service company, must review the relevant engagement. This is what Sarah was talking about earlier, and make a determination of the contractor's status, and then must provide the PSC worker with what's called a status determination statement, which gives reasons for the determination, and then the client can withhold the tax. And it needs to take reasonable care while carrying out the relevant assessment, because if it doesn't, then it's not a proper status determination statement. and then it has to, if there is an employment relationship, then it is the client that has the obligation to pay the tax. It can't withhold it from the worker. So when it comes to determining whether an employment relationship exists, as Sarah mentioned, there is the HMRC assessed tool, and that's where it's available from. And as Sarah mentioned also, HMRC will stand by the results from CEST, provided it's used properly and reasonably. It is interesting if you go on and put in information. It is much better than it was when it first came out. But the problem with determining whether an employment relationship exists is that it's ultimately, it's a feel. It's whether you look at the relationship as a whole, and each relationship is different, and there can be a lot of nuance about whether there is an employment relationship. So if you look at the discussions in the Athol House case that Sarah was mentioning earlier, the revenue were looking at a highly prescriptive basis. They got lots of information, but they didn't really seem to stand back and look at what is this relationship really. And when you've got experience in status, you've got a much better feel for it. It's not a tick box thing. It's a balancing thing. And I find that the revenue don't seem to have got the experience and expertise in this area that they used to do. When I first started in tax, there were very frequent status inquiries looking at whether an individual was an employee or self-employed. And then for a period, there were just very, very few inquiries into our clients. And I don't think this was exceptional. And I think that the revenue then lost a lot of experience and expertise in their amongst their staff. And I'm not sure whether they'll ever get it back again, because they still seem to be following a very tick box sort of way of looking at it. Whereas there is an awful lot of employment tribunal cases, which is the tax law is usually based on, and also tax cases, which determine whether an employment relationship exists. And they don't seem to look at that, and they ignore it. And then they get a beating when they go to the tribunals, which is really pretty much what's been happening in these more high-profile cases that I mentioned earlier. One of the things that the CEST guidance says is that the client, when it's looking at an IR35, sorry, off-payroll working, the client should check the answers with the worker to make sure that they reflect the actual expected working practice. And as Sarah mentioned, in borderline cases, you get a result that is unable to make a determination. So then you need to go and seek specialist advice on whether a relationship is on balance, employment or self-employment. So there's a summary of the off-payroll work rules. These apply from the 6th of April 2021 if the ultimate client is a medium or large business, usually a company, but it can be other entities. We've still got IR35. The off-payrolling work rules require the client to deduct tax at source when there's an employment relationship. IR35 still applies to the intermediary when the client is small, and then the obligation to account for tax under the IR35 rules still applies to the intermediary. And that's what I wanted to say. And we'd be very pleased to answer the questions. We've had quite a few questions already.
Hello, yes, as Jill said, we have had quite a few questions come in. So I will start those off so we can get through as many as we can. So firstly, for Sarah, can a business state they are taking a blanket approach to contracts after this deadline in April?
The simple answer to that is no, they can't. It might be tempting, I think, for some businesses to look to kind of take a cautious approach to things, and also to not want to get bogged down in having to look at and examine each specific engagement with contractors. But the revenue have been quite clear that in producing status determination statements, clients have to take reasonable care. And the HMRC's Employment Status Manual gives some examples of what it would class as reasonable care, and as well some behaviours that would not meet that test. And one of those is just taking a blanket approach and determining that a whole swathe of contractors fall within the off-payroll working rules, and therefore treating them as deemed employees. That's not the right thing to do. It is important that you do, as I say, exercise reasonable care, and that involves looking at each engagement on an individual basis.
I would mention,
sorry, go on, Jill.
We are noticing that some businesses seem to be actually putting people on the payroll now. Because it probably would be too much work for them to look at each individual contract, when actually they're all very similar. They are beginning to put people on the payroll, and also possibly looking in more detail at their individual self-employed contractors, and maybe putting some of those on the payroll too. But that's just anecdote. This is just experience from clients of ours.
Another question that's come in that sort of ties into that, that what you were saying, Jill, is someone works sort of, it's a TV presenter, and they present one show a week for a specific TV channel, and the production company is insisting that this person goes onto PAYE. But it looks like from the information that they've given that all they've done is slightly tweak the contract. Is there anything specific that they should be asking about? Is this the correct path that they should be going?
As I mentioned, really, every contract is different. And particularly with a TV presenter, it really depends on the nature of the programme. I mean, I've been helping one of our clients who is a TV presenter, who, it's amazing, he looks like he's so controlled because he's so professional, but actually he's so professional because he does so much work behind the scenes that nobody controls what he does. But the revenue are being really intransigent. They're just not looking at the underlying issue, which is that he is actually in control in the studio. But then there are some TV presenters, newsreaders are an example, where they are pretty much controlled. And there was a case, I can't remember the name, she worked for Yorkshire Television, and she took her case quite a long way, but she really was controlled, and she really had no chance of being accepted as being self-employed. So we would need to have a look at that individual and what they do, their contract, everything. You can't really, there's not one size fits all. One get out of jail free card is seen to be having a substitution clause, which is realistic, but I strongly suspect that wouldn't be feasible in this case, because it is that individual that the TV company wants.
We've had quite a few questions sort of all surrounding the same idea, that if you work with a company for a particular length of time, does that automatically put you into one category? Or if you work for multiple clients, does that automatically put you into a different category? So are there specific things that automatically tick a box for you in either direction?
No. I mean,
Agreed.
Relationship, it comes back to this, I'm afraid. Having only one client isn't helpful. Having more than one client is helpful, but they still, I mean, in the days when we used to get status inquiries, I successfully argued that a carpenter who worked for a theatre almost exclusively was still self-employed. And, so you've got to have a look at the whole relationship, as I say. What are your thoughts on that, Sarah?
Yeah, no, I agree. And I think when it comes to length of duration, there isn't a sort of sweet spot at which point you tip over from being self-employed to an employee. I think the reality is the longer an engagement goes on for, then the stronger the mutuality of obligations between the parties. And I think on a more practical level as well, familiarity creeps in over time. And often at the outset of engagement, the parties will stick quite strictly to the contractual terms that have been agreed. But then over time, people just become part and parcel of that particular organisation, and they'll be invited to functions and events and meetings. And before you know it, they're being treated in a very, very similar way to that client's employees. And that's when the lines can become very, very blurred. And often when you can encounter problems. So I think it's really important, and I always encourage clients to regularly review these arrangements because they will change over time, and there's no problem with that. It's when you ignore those changes and you plough on regardless that you can get unstuck, really. So I think keeping your eye on things and regularly reviewing them is really, really important, because like Jill says, there is no simple answer. It isn't a case of just plugging in some responses into a calculator and getting an answer at the other end. It is more nuanced than that, and it is trickier than that. And I think keeping things, as I say, under review is really quite important.
Another question that we've been asked, this person says that they are a contractor and believe themselves to be self-employed. What can they do if their client says that their relationship is actually an employment relationship and wants them to pay tax?
Well, in this case, there isn't a formal appeal mechanism to HMRC. You basically have to go back to the client and say you disagree and ask them to have another look at it. But ultimately, they are the judges, and it's their responsibility. If the relationship is actually employment, then if they don't deduct the tax, they've got to account for it. So they would naturally be very prudent. And if it's borderline, and I were advising them, I would say, well, yeah, treat them as if they're an employee, because otherwise it gets just too risky. So you've got to try to convince your client that actually it is a self-employment, but ultimately it's their choice, their decision.
Yeah, I mean, there is a mechanism for appeal under the new rules, and there's 45-day time limits for clients to respond. But Jill is right that ultimately the client is the party that's applying the test to determine their likely status, and it's a little bit inevitable that if it is borderline, they may well prefer to err on the side of caution and rather than expose themselves to the risks, really.
One of the previous examples that you were talking about where companies had started to just put contractors straight onto employment contracts, do they then have to provide all of the employment rights that a normal employee would get? Or can they pick and choose, or does the relationship stay the same and it's just the contract that's different?
Well, if they're employing them as employees and they would meet the employment test from an employment law perspective, then they would benefit from the employment rights that go hand in hand with that. But that's when it's important to distinguish, for example, between employees from an employment law perspective and workers, because as I outlined earlier, the rights that attach to those categories of individuals are not the same. Employees have the full suite of employment law rights, and workers obviously don't. They have the sort of basic key rights, but they don't have, for example, the right to unfair dismissal protection after 2 years service. That is reserved exclusively for what you might call full-blown employees. So yes, I think, like I said before, if someone's an employee from a tax perspective, doesn't automatically mean they will be from an employment law perspective, but you would think it may be likely, given that the tests are really very, very similar. You just have to examine it and determine whether, yes, they are genuinely an employee for both a tax and an employment law perspective, because they're not one in the same thing necessarily.
But they usually are.
Yeah, exactly. They usually are. If you're satisfying the test from a tax point of view, chances are you will be from an employment law point of view. But as I say, we do have this hybrid of a worker, which does make it slightly more complicated from the employment law side of things. And that's really, I suppose, derived from a public policy stance of looking to protect slightly more vulnerable workers out there who are not fully fledged independent contractors, but maybe not quite ticking enough of the boxes to meet that high threshold of being an employee. They're mocked up a little bit by this concept of a worker, which was very definitely in the Supreme Court's mind in the Uber decision, a bit of a sort of paternalistic view on things, I think.
I think we've got time for one last question. And the question is, are there any HMRC guidelines, templates, anything that they have provided for contracts or determination letters that if you use them, you're good to go?
I don't think HMRC have produced any status determination templates as such, I don't believe. Not that I've come across. I don't know if you've seen anything, Jill. No,
sorry, go on, Sarah.
I was going to say there'll be no template, but I think part of using the CES tool would give you some sort of useful evidence to back up any status determination statement.
And there is this guidance that requires you to talk to the individual as well. And so I would have thought that once you've talked to them and you've agreed it, then you probably will be okay to you can download a PDF. It's date stamped. It's got quite a lot of information on it. And if you pass that to them, because then that gives the reasons. One of the things you've got to do with the STS is give the reasons, and attaching the CEST printout should give you enough reasons.
Great. Well, thank you, ladies, for your time this morning. We do hope that this has been useful for everyone. If you do have any questions, please do let us know. Like I said, we'll be sending out an email with a copy of the presentation and the slides, so you can just reply to that or contact one of these lovely ladies directly. We hope that you have a great rest of your day and a great rest of your week, and hopefully we'll see you soon. Thank you.